This is Energy of Business Moments with Michael Sipe, the show that takes you around the world to share interviews with some of the most successful and relevant people on the planet. Hear their stories and get the most important business lessons they have learned on their road to success, and get exclusive advice on how to implement their business success into your life and business. Energy of Business Moments is brought to you by the Strategic Advisor Board and your host, Michael Sipe.
Hello, everyone. Welcome to the Strategic Advisor Board Energy of Business Moments podcast. I am Michael Sipe, your host for today. And today I've got Neil Keegan of Marlinspike, and he is the CEO of a company that does investment in disruptive technology, and specifically in the government space. So Neil, as a Naval Academy graduate, fellow Naval Academy graduate, welcome to the show. Glad to have you here.
Great. Thank you, Michael. Appreciate it. Great to be here.
Yeah. Well, wonderful to have you on today. And as a lot of people know, there are some really disruptive technologies out there that struggle to get to the market and actually get out there. And the innovation success rate is abysmal, sometimes around 90 to 95% failure rate. So I'd love to hear an investment firm's take on how to bring disruptive technologies to bear, and tell me a little bit more about your company and how you got started.
Sure. Thanks. Maybe I'll start with the origin story, and then I'll come back to the first part of the question. So great to be here, everyone. Thanks for listening. My quick background, I grew up in the DC area, always wanted to go to the Naval Academy from the time I was in the third grade, and, ultimately, accomplished that mission, went to the Naval Academy, and absolutely hated it. It was brutal. It was tough, but I made it through, and was glad that I did. I did 6 years active duty as a surface warfare officer. Decided that I wanted to get out and study economics and finance. So I did that. And then, fortunately found my way to Goldman Sachs in New York, worked there for a number of years, and then wanted to move to the West Coast, where I had done a tour of duty in Southern California. And I figured I liked sunny skies and 72 versus, rainy, snowy, terrible New York winters. So I made the move, also with Goldman, got up and running pretty quickly on the investment management side of the business, and also was fortunate to work with a client that had sold their business, and then had the opportunity to establish and run their family office for 11 years, which was, really interesting, learned a ton, terrific family, and also, did this during the financial crisis and then up and out through that. So learned a ton about investing in both the public markets and the private markets. But the whole time I knew that ultimately I wanted to run my own firm and then manage my own investments, and build a really strong, high caliber team to invest in things that I was personally passionate about. So after that, I really did a round trip back to the DC area, moved back to DC, with my family, and then COVID hit, which was, unexpected, obviously, but it also created an unbelievable opportunity to, test my theory about, putting money to work, raising capital, and building a team. And that's what I did. So in the middle of COVID, with a couple of partners, went out and found an interesting block of stock in a very disruptive, interesting company called Palantir. We put together what's called a special purpose vehicle, an investment vehicle, in private shares of that company right before they did what's called a direct public offering, which is essentially an IPO. And we had some really good success. And our clients got a good return. We got a good return. But the most important thing is that it really hit on something in terms of a strategy that was very near and dear to my heart, which really comes back to being mission driven. And I know, Michael, you're focused on energy and what drives people, what drives leaders, what drives teams. And I think it's really that passion for the mission. And what Palantir does is an example of what we do at Marlinspike. We're looking for really interesting, innovative companies, particularly that are solving challenges for national security, and they're solving them with disruptive technology. And ultimately, from an investment standpoint, there's a lot of unique characteristics where you can de-risk an investment when you've got companies that have government contracts, government revenues, non-dilutive capital, but they also can provide, massive commercial applications, which from an investment perspective can really yield to a great investment return. So that was really the premise for Marlinspike. And subsequent to Palantir, we did 9 other transactions, all on a one-off basis, either in a direct capacity or special purpose vehicle. We deployed about $100 million, throughout the 18 months of the, really the prime of the COVID period. And then we got ourselves in position to go out and raise a dedicated fund to pursue the strategy, which is what we're doing right now.
Wow, that's really quite fascinating, because what most people don't know about the government contracting side, but typically margins are pretty tight for government contracting. And so to find and get a disruptive technology out in the forefront and launched and successful actually is quite challenging, right? A lot of people are trying to break into that space. So with that kind of background and thought about energy, and we were talking earlier, energy is the thought we might have, the emotion we might feel with that thought, and then the action we might take. And so there's a whole gamut of different types of energy people bring to their business or to their leadership style or to teamwork, as you said. And so from that perspective, sometimes getting into that government contracting space or launching a company can be very challenging. So share with us a little bit about, maybe from your perspective with Marlinspike, where you felt like, man, that did not go well, or felt pretty bad about something.
Well, that's true. So a lot of the companies we work with, we tend to like them when they do have some element of government or Department of Defense or intelligence community validation. So they're generating revenues, which essentially means like their product or service is working and it's solving the need. So we like to look at that way as a way of de-risking our investment dollars, both for ourselves as fiduciaries, for our clients and our own capital, because we're very focused on putting our capital to work. And this is really it. This is kind of the last stop here in terms of, the highlight, I think, of my career, as far as everything that I've done up to this point has really led me to the creation of this firm with my partners and for us to really bring this to life. So, on the energy front, thinking about, difficult time. So putting money to work during COVID was certainly stressful, and raising capital. So we're constantly dealing with looking for the right investment opportunities. So there's a whole pipeline of opportunities we're looking at and trying to make sure we find these gems that we think have the right mix of team and leadership and innovation, but also valuation, so we can get a great return in a reasonable amount of time. And then on the other side, it's finding the right investors, and you've got to talk to a lot of people to really find the folks that are attracted to what we're doing, because it's not for everyone. Some people like to just invest in the liquid markets and be in stocks and bonds. So you're constantly winnowing down into people that want to invest in illiquid assets, that want to invest in venture or growth assets, that want to take risk, that want to be invested in a company that has, hopefully positive national security implications. So the business is really that, dealing with clients / investors, finding the right companies, and then working with those companies and helping them, and then making that all work from an operational perspective. It's like three legs of the stool. And in running a fund, it is a real business. It's an asset management business that takes a lot of time and effort to really get it right. And I can't say that we've gotten it right yet, but we're heading in the right direction. And a point that was nerve-wracking was launching the fund. So we launched in January of this year after a huge 2021 in terms of public markets and private market exits. We had a lot of success raising capital and putting capital to work, and we had kind of a go or no go of, look, we spent a lot of money on legal, we put the team, we hired people, we were all chips in. And then starting in January, the market started to get rocky, and we said, look, we've got to raise at least $10 million, or we just should go flip burgers at McDonald's. Like, then it's not meant to be. But the good news is, we basically doubled our target. But then as we got through, going through the rest of the year, look, this has been the rockiest start to the equity markets in over 50 years. So trying to raise money in that environment and being effectively a first-time fund, these are big hurdles. So we're chugging along, and I think persistence and consistency, those are the things that I lean on, in addition to my great teammates and the team that we built, is what kind of keeps us going and pushing that boulder up the hill every day, because you got to do it every day, because the big wins, they don't happen every day. But if you don't do the right things every day, they won't happen at all.
Mhm. Yeah, thank you for sharing that. And you're absolutely right. You're almost undertelling how difficult that time was, because basically the markets in the growth space turned in December of this past year, and you were launching it there in January. I mean, your timing was not very good in terms of, it's only recently there were growth stocks have started to turn around and private equity starting to come back and talk about IPOs and things like that. So your comment on persistence. And then I think a little bit too, what's interesting is how you look back to your past, you look to your team and saw that, hey, there's a lot of strength in what I've done in the past, and I've got a great team. And yeah, it's a rocky start, but you identified a target, like I got to get 10 million, you got more than that. So you figured out a way to get through that sort of tough period. And now you're coming out the other side and things are starting to look a little better. How accurate is that assessment?
No, you're 100% on point. So it's interesting. It's almost like one door closes, another door opens, or the times of adversity set you up for your greatest success. And I totally believe that. And I look back on my life and I've seen that, and you can read about it in some of the great leaders and entrepreneurs in history, and that is the case. And that's been the case with us. I mean, I think when we look back on this period of taking the risk to start this company, and even proceeding into the teeth of this market, and proceeding with putting capital to work in great deals, proceeding to get new investors, proceeding to be adaptable to tweak and adjust our presentation, and to go after different pockets of capital, like institutional capital, fund of funds, strategics, big prime contractors versus high net worth and family office investors, where we still focus there as well, but expanding the network and managing our time and our effort to try to make this whole thing work. I think when we look back, we're going to be really proud that we did what we did. And then from the investing standpoint, I was looking at some data the other day in terms of all the funds that had been raised subsequent to the great financial crisis. If you look at 08 and 09, the bar chart just goes up. It's up and to the right in a material, like at a 45-degree angle. And then there's this year. I mean, it drops off a cliff. So if we do what we did first half of this year, we'll probably be at 2008, 2000 levels of funding. And most of that funding goes to existing managers. Because if let's say you're running an endowment or a pension fund, are you gonna pick Marlinspike, the new kids on the block, these kind of scrappy, guys, or are you gonna pick a Blackstone? It's pretty easy, right? You're going to go with the low risk option, so it becomes even more challenging. However, first time funds typically put up the best returns, and in these market vintage years like 08, 09, you look back and like, oh, of course, that was a great time to put money to work. So I think this year, next year, and who knows what's going to happen with the markets. And we're in challenging times, but that's the best time to invest. And we're seeing that with our, portfolio companies and our opportunities. So as hard as it is to raise capital, the opportunities are plentiful in our space right now. So I think looking back, we'll be very glad we took this risk.
Yeah. I think most listeners will resonate with the idea that as a leader, one has to look at a crisis space as being an opportunity, because that's, like you said, where things can really grow out of it and grow at a greater rate than anticipated. So, when you think about your perspective of, hey, where's the opportunity? Where can we go? That sometimes leads to a sort of a fervor, if you will, a passion for doing something bigger and better, or just to execute on that vision. So from an energy perspective, sometimes those emotions and those ideas coalesce together where we have that strong passion, joy. We might even have gratitude because, hey, we're 5 years into the fund and it's cooking with gas. But when you're not quite there yet, what's been like a high for you energetically as the leader of the company?
Wow, great question. There's been a lot, and I think one of the biggest highs was just recently, a few weeks ago. It was really a great day. It was a culmination of a lot of hard work from everybody on the team. We started off the morning, and I was with one of my newer partners that came on, a gentleman named Chip Walter, who's a Naval Academy graduate, class of 1983, 28 years in the Navy, retired captain, P3 pilot, worked with General Petraeus, and then followed General Petraeus to the CIA, worked very closely with this group called InQtel, which is a strategic investment arm for the intelligence community, and then left to go to Northrop Grumman, where he was working on their venture program. And so we were lucky enough to bring Chip over. So when I look back over, last quarter, as difficult as it was, we're still attracting, great people. And he's super passionate about what he does, adds a lot to the team. And we had a great day together where we started off the morning talking to one of the biggest publicly traded defense primes in the world about a potential partnership. We had then met with a portfolio manager at a pension fund, which went well. Then we had lunch with 2 potential new clients, which, a week later committed. And then we ended the day, we had an opportunity to sit down and brief Senator Todd Young, who's from Indiana, also class of 95 from the Naval Academy. And it was really incredible. He wanted to learn more about, Voyager Space, which is one of our portfolio companies. And we just wanted to be helpful. We said, look, we know, and I don't know if you saw the news about the CHIPS Act passing in the Senate yesterday, which is terrific for our country. Hopefully it can get through the House and onto the president's desk. It's about $280 billion that's going to go towards, bringing more chip manufacturing here in the U.S., but also a lot of capital for more, science and technology innovation in the country. And so we met with Senator Young and gave him a briefing on Voyager Space, as well as the fund and what we're up to. And he loved it. And we were there basically saying there was no ask. We weren't looking for capital. We just said, look, we're in the space every day. If there's things we can do to be helpful to you and helpful to the country, we'll do it. So that type of mission and that type of day, that was one of the pure highlights of what we've done at Marlinspike. And that kind of mix of investing, meeting with clients, and really trying to do the right thing for other stakeholders, either in the government or the Department of Defense or the intelligence community. That is the mission, and everybody on the team feels that mission and feels that energy.
Yeah, that's a great example. And you also talked earlier about the 3 legs of the stool, and so it sounds like that day for you covered all 3 and then some. It was also like a service piece too, like, hey, Senator, like, here's how we are contributing in the space from technology and from a defense perspective and helping out the country. So not only did you do your 3 legs of the stool, but you also got to give some good back into the community. So that's a great story.
We like to think so, but it was a great day.
Yeah. No, I love that day. That's wonderful. We love those things. Need them more often, right? Good. Well, Neil, sometimes people have some influential role models that we have. And sometimes it's, when we're starting out and we have a mentor at the young age, sometimes it's, reading a book and learning some really great ideas on how to be a leader or manager of a company. But other times it's just somebody we really admire and respect. We never have the opportunity to meet with them. So I'm going to ask you this question. We ask a lot of our guests is, if you could meet and spend time with anybody, deceased or living, who would that be and why?
I love that question. And it's really hard to choose one. And the first couple that came to mind, one was Elon Musk. But I'm sure you've had a million people say Elon, but I won't say Elon because I still hope that one day I do get to sit down and chat with him. The next one would be Steve Schwartzman, the founder of Blackstone. Terrific book, by the way, which has really been the playbook for me as I've been thinking about building out Marlinspike. But I also hope to meet him at one point. But one I've been really intrigued with most recently is Admiral Chester Nimitz, who is deceased. So 1905 Naval Academy graduate, commander of the Pacific Fleet during World War II. And the reason I'm attracted to him is that I've seen my role at Marlinspike really become more of a leadership role and team builder, strategic role, and we've really built out the investment team. So as I started off, really wanted to focus more on the investments and being the chief investment officer. It's really, I'm seeing that my time is needed, and I'm actually gravitating more towards the overarching team building, leadership, strategy, and then spinning all these different plates to make it happen. And, what better person to talk to than someone that was, running a very complex organization at war when the stakes couldn't have been higher for our sailors and our country. So I'd like to sit down and really learn about, what he was going through, how he thought about major decisions, how he handled stress, how he prioritized his time and resources. I mean, these are key elements to being a successful leader, especially under times of distress when the stakes are very high.
Yeah. I think that's a really great insight to have somebody like him. And this background for our listeners, World War II is a very pivotal time in U.S. history, obviously, because of the threats to the country. And we have various threats throughout time. But what's interesting to me about your selection of Nimitz is the idea that, a lot of his focus was on Japan and World War II and that area and the threat to the Pacific. But yeah, he was a Navy guy, but he had to know all about the Army. He had to know all about the Marine Corps. He had to know all about the Army Air Corps at the time before the Air Force and how that all integrated and played together. So it was a multifaceted piece. And so that's a lot of weight of, running different things, as you said. And so it's a huge undertaking, and why he partnered so much with MacArthur under the Army to help win the Pacific. And the dealing with stress and dealing with all the challenges, that makes a lot of sense.
You sound like a history major, Michael.
Well, I spent some time in Hawaii, and so I know a little bit about Nimitz and MacArthur. but absolutely, history is, if we don't learn from the past, we're bound to repeat those same mistakes, right?
No, and I love your Churchill behind you too. That's a great one.
Yeah, absolutely. Good. Well, Neil, I have loved having you here on the show, and I really love your thought process and how you're shifting a little bit in your leadership and where you thought you might have needed to be, and now you're pivoting a little bit, and all businesses need to pivot. So that's great. For our listeners and viewers, how can people get a hold of Marlinspike or you, and maybe from an investment side or from the side of being a disruptor in the technology space?
Sure. Look, we're open for business, and I'm always open to meeting new people and to talking to great portfolio company CEOs, and I love talking to investors. I'm on LinkedIn, Neil P. Keegan, CEO of Marlinspike. So just check me out. Send me a message, hit me up, and I'll hit you back.
Awesome. Very good. Well, Neil, thanks for being on the show today. I appreciate it very much.
Thanks, Michael. Appreciate it. Go Navy.
Go Navy.
Thanks for listening to Energy of Business Moments with your host, Michael Sipe. Please leave your feedback and visit strategicadvisorboard.com to get the latest and greatest business advisement on the planet. Follow us on social media for updates, and we will see you on the next episode.